He left controversy behind. Dave Anthony, Fox News. The mic off.
Great. Good morning, everyone.
Good morning. Good morning.
And post Thanksgiving. Great to have y'all here. A lot of giving thanks and food, I'm sure, over the long weekend. So oops.
Morning, everyone.
Hey, Shariah.
Morning, sir.
Good morning.
Morning.
It's cold, it's hot. I don't know what to do in my house. Mike got a tease on. I woke up in the morning. I was like, yeah. Then after 30 minutes, I was like, I'll put a jacket on. Fred watch. Oh, yeah.
Heavy enough. Let me sit back.
For now, I'm just gonna eat my breakfast.
Let me sit back.
Hello, hello. Good morning. Happy Monday.
Morning, Sanjay.
Hey.
Hey, how are you guys doing?
Very good.
Good. Good Thanksgiving. Kids back to school.
That was a big one for you, wasn't it, Tom?
Yeah, I know, right? You know, as much as I like that kids are gone for most of the day, but school is just this stressful thing, but they're almost done.
Kids do a lot of work, though. If you think about it, I mean, we think we have a W-2. They have a worse W-2, man. It's like, or it starts in the morning and keep drilling until they go to bed and they've been told, and it's a whole dynamic of it. So their life is tough. We didn't realize it, how tough our life was. So as we get into the workforce, it gets easier, right? Well, that's what my opinion.
Yeah.
Michael's like, yeah, about that. So,
Yeah.
all right.
Relative term.
What's up?
You said easier. Yeah, it does get easier, but parenting never stops.
Never ever.
I am 100%.
Yeah.
It's like something will happen, right? Something will happen somewhere. Question is,
Mhm.
how can I even grow as fast as they grow up, right? That's interesting. Okay, cool. Let's get started. Morning, everybody. Thank you, Mike. I will start sharing the screen. And let me know if you started. When you
Hi,
can see my
okay.
screen. Hey, good seeing you, buddy.
Good morning.
Morning.
Just recovering
Right.
from a broken shoulder.
When did that happen? Oh,
Wow. About 6 weeks ago.
good. Okay. Sorry, man. Hope it gets better soon. It's a tough one. Especially
Yeah.
winter time, it takes a little bit of time.
It's frustrating.
Yeah.
More than anything. So how you guys doing?
Right. We've been blessed, at least. No.
Good.
All right. Can you all see my screen?
Yes.
I
Oh,
do.
awesome. Okay, so let's kick it off.
I don't.
So happy Monday, everyone. This call is no bots. I don't see any bots today. So Mike, I'm assuming you are the gatekeeper, my man, on that one. Just let me know.
Sure.
All right. New member introduction. So again, this is the inner circle for us, and also that's not one is Massive Masters. So this is for the inner call for Massive Masters only. We're going toward that route. New member intro. Anybody here that we haven't met? Let's go to the room.
I don't-
think it's anybody.
I don't believe so, Sharar, but if
Oh.
anybody feels like they've not had a chance to intro themselves, use the little raise hand and let us know and we'll get to it. So I would say for now, keep rolling for now.
Oh. Okay. So let me kind of kick it off then. So quick update on the interest rate. This is our Fed watch handy dandy tool. So we are about 2 weeks out, and market is pacing towards where we are today. So on that note, there's a job information coming up, I think in next week or this week sometime. So we'll see which way the market goes. But from that end of it, it is steady state at this point as you go. Interesting to keep paying attention, the rate cut and the 10-year treasury. Even though there was a rate cut, we talked about it last week, the treasury went down, then went up again, and the multifamily rates back to the high point versus 3 months ago versus now. Within the last 3 or 4 months, rate went up to about 0.5 percentage point. So all in all, even though on the surface it's a rate cut, underneath that we take on is mostly tied up to the treasury. So kind of keep that in mind as you kind of go through. And that became that's one of we measure that because we're going through a hard loan exercise now that we triggered for Pasadena. So those are the two things you need to keep in mind. And the next year we could see some rate cuts. But you can see over time the rate cuts in the race and next going into Q1 and Q2, it's not looking that we're going to have it. But again, massive size probably another 7, almost a 1 point bump by the time next year this time happened. Q1 and Q2 will be a flat going in. I think the dynamics is what I get is that once Trump takes over, then it's a pro-business. Then I think he's going to go after the banking regulation to ease up a little bit. So make sure the funding continues to the lending exercise. What way, we don't know. That's the concept. That's what it feels. So take with a grain of the salt. When the funding gets available, that means the economy will have money to spend. When you have money to spend, you'll have competition to buy, and you'll have competition to whatever you do. So in a sense, what we see that inflationary direction view is going to stay at par with what we have now, and not to let it go up, interest rate will stay high for a little bit, and that's what market is baking in for now as you kind of go through. Sanjay, you want to add something to it? How the Pasadena and everything else being impacted? How based on what we see?
Yeah. So, this is data comes every week and this gets adjusted, the probabilities. So last week, the 425 to 450 bucket for the 12-18 was at 55 or 56%. So this week is a little bit higher for a rate cut. I don't think this 5-7% really makes a big difference. But you know, the generally maybe not in December, but maybe in January another rate cut is still you know, if not this time, then it's even a lower probability. So it's a little bit of a moving target from the data perspective, but economy is, you know, what I'm seeing, both things are happening. Stores are closing, certain businesses are adjusting, but at the same time, our GDP is doing well, and you know, we're growing. U.S. economy is growing, doing well, and U.S. is the best place compared to rest of the world from a financial markets perspective, right? So I think as we underwrite the deals, like Sharar said, we are underwriting a little bit higher interest rate right now. Back to you, Sharar.
Thank you. I took a screenshot, so I'll try to take a screenshot as I go through, so at least we have some trackability as we go. Cool, sounds good. So thank you. So that's there. So all in all, going back, the rate's gonna be a little bit higher for longer, and then how that ties into our deal flow side. That right now we're seeing, okay, this year it was all about kicking the can till 2025, assuming the rate drops and all this kind of other stuff. That executed well by everybody. But now some of the deals that, and I'll give an example. Oftentimes what happened, lender said, I will let go, I'll forego this fee, that rate, and this rate. Why don't you bring in some extra money, sponsor team, and you can go. Almost everybody has done that. Moving back into this year, and some of those assets at the very bottom layer where it didn't make sense to bring in the money, but I didn't know. At least I brought the money in with that intent of a rate drop this year, Q1 and Q2. That didn't play out, so what's gonna happen? Those deals are gonna go back to the servicers and or to the market. So we're gonna see, that on the debt wall, it's slowly moving forward as it goes through. We'll see some deals come through as we kind of go. So we're seeing that uptick because the servicing companies are getting busier. The specialty lenders or specialty attorney team who does negotiate the loans on behalf of borrowers, they're getting busier. So we're seeing that part. So over time, we believe that Q1 and Q2, maybe up until Q3, we'll have deals coming into the marketplace as we kind of go. Now we're going to see more of a Class C deals because Class A's who came to the market, they have been, transacted out on the back door, not quite the broker on the back end. It's like a handhold, tap on the shoulder, go do it, or I'm looking for that distress, I worked that out. Now we're going to see a little bit more market-driven transactions. So we'll see that kind of happen moving forward. Okay, that's there. And the rate-wise, we talked enough about it there. Now, I want to share something interesting as you kind of go to multifamily pricing. All Capital, James Yang, he does quite a bit of analysis as well. He put this chart out just at a flavor. What I meant to say a flavor means that why am I sharing this? In my mind, oftentimes you'll see someone say, hey, I got this property at a 20% discount. But the right statement is, I got the property at par with the market price, which is 20% lower because rate went up, right? So from your side, expect that if it's not a good or bad, right? When we buy or sell, it's an emotional transaction. The analysis that he has done, the cap rate, the impact based on the interest rate. If the interest rate stays the way it is, you will see oftentimes, sometime, we play in this space, a little bit of that space, Class B and Class C. Everybody on the Class B and C, whoever has a bigger backer, they want to Class A, but B and C, it is going to be a decent amount of transaction coming up. So just be ready. I like the analysis, it's not quite that high, but you can see the spread between a 4.7 versus 7 cap, right? It's a $6 million hit, so all of your equity gets lost. If you come in at a 4.7 or 5, and then you sell it at a 6, right? Even 5 and a 6, 1 percentage point is a $3 million hit. If you buy an asset for $20 million, you're raising $4 to $6 million, and plus capex, right? So
And Sharar, on this, in this chart, you're saying that the cap rates for Class A didn't go up as much, but for
Yes.
compared to Class C, the cap rate went from 4.75 on
Yes.
average to 6.75, so the 2 percentage point,
Yeah.
right?
Yeah, 2 points. And you'll see the downwards now, depending on what city are you in, you're seeing clearly higher 6 handle. Sometime you'll see 7 handle. You're not gonna see 4.5, 5, 7 handle. Everybody who are here, they're stuck there, right? So that's the spread. Going back from we're on the buy side, and on the buy side, it's going to have transactions. We're gonna see more volumes coming up. We're gonna see a lot more C's coming through. And just, now that means the underwriting, the valuation, the analysis, the property management company, the debt and equity partner, the more things we can line up, better positioning we're going to have as we kind of lean in. That was there. I thought that was interesting. Okay, so I mean, the multifamily pricing, we talked a little bit about it, which is the chart that I wanted to share. And PwC Goldman, there's nobody else new came about that I thought it was interesting. Lending availability, bank exposure. I think bank is gonna go through their fair share of it. Recourse loan, we take recourse loan. Recourse loans are available. CMBS, it's an issue. For us, we haven't done much of a CMBS. We looked into it. We kind of gun shied away for CMBS, but we are willing to go into CMBS space if the deal makes sense now than before. So 2025 strategy from Massive side, we are positioning ourselves in terms of a buy mode, which is we got the balance sheet lined up as much as we can. So we can go assets from 5 million to 30, 40, 50 million. And then we are actively working on larger equity check writers and also actively working on building the equity raising arm, which is also why all the Massive Masters and the Canvas Measure, our position is that, hey, be ready to invest. Every dollar will count, even though you may do a smaller deal. Small, big, it doesn't matter. If you do a deal, as we are getting ready to underwrite the deal, make sure that we are ready to deploy the capital when a deal shows up. Because sometimes we just don't know when the deal is going to show up. But when they show up, we really need to be able to execute, right? So that's there. I'll talk about interesting what happened last 2 weeks, especially last 3 days. No, Thursday and Friday. That resulted in a phone call today, a little bit down the way. Sanjay, anything else you want to talk about the 2025 plan, or are you good, Mike?
No, it's
No,
good.
that's
Cool,
great.
awesome. Thank you. I'm going rather quick, so almost all of you guys kind of follow the pattern a little bit, right? So on that note, again, like our new partnership with Phil and Shinoa, that's in place. We are fully in place starting January 1st. That's gonna boil down to some of the workflow changes that we do. That's also gonna slightly we have to adjust this call as well. As you know, there's no new people here. That means everybody has came through here. And this meeting is for Massive Masters and the Canvas Measure and everybody who have done deal together. If we haven't, then we're reaching out to you to work something out to make sure that you are inside the group as you kind of work. As you kind of go that. Brenda will be a focal point, and if you're not a Massive Master, we'll probably reach out to you to please, again, let us know what the best way to build the bridge. So January 1st, everybody get to participate, just like this call as you kind of go through. Investor, the couple of things are happening for us. If I can spell right, life will be good. So investor relations, we are spending quite a bit of time on the back end to bring agentic workflow, ChatGPT or LLM-based workflow. So we worked about a couple of months now to create the workflow for automated GPT-based phone call for the investor relations. We designed the workflow, we tested it, we give them the personality. Right now, we're creating the knowledge bank, and then we'll be starting to test it out starting next week. We're going to reach out to all of our database, run that first one. We didn't come up with the name yet. Something with the angel, but what personality we don't know yet. But that investor relations bot cold call, that's going to happen sometime next week. We'll do a sample test at a time. We're not going to let them do anything crazy, but for now, the first layer of the phone calls will be just to welcome all of our investors and letting them know that we have data that's going to be tied into these those bots, and then we can have an interaction as we kind of go. So that's a big workflow for us. Now, quick data point, I talked to some of the other folks. It is cool to have. Some people enjoy it, but some people do not enjoy it. And we got to figure out on the feedback loop on that one. So we felt like this is one way we can stay on top of our investor minds. If you have 200, 300, 400, that may not be the case because they know you in person. If you have 1,000, 2,000, 3,000, and then it makes sense to give them a call every quarter or so, just to make sure that they are, there and you are there. And that's one way we are planning on engaging that. Once that gets established, we'll share more as it kind of come through. So we are really excited about that workflow. Other one, it's that there's a big workflow for us on the finance side, on the asset management side. Some of you guys know, some of you guys seen the Power BI and data rollup. We are reviewing the workflow and the process. So we have a specialty project team now that just went online last Thursday, Friday, to revamp our workflow, and again bring in AI on it. And the second thing that we're trying to solve, everybody who's a GP with us, they should be able to access the financial data without someone giving that to them. So that's the biggest driver that we're working for that one. And on paper, I think, it looks like we can do it. And so our goal is to wrap that project up by this December. So next month, if you're a GP, if you're a sponsor, or you're a co-sponsor of a team, of a deal that we're running together, then the reporting gets done for you as a part of that workflow. So more to come. We're excited. It's a lot of work. It took us a lot of thought process, a lot of making mistakes to get here. We attempted ones in Q1, Q2 this year. That gave us a flavor of what not to do. Now we took about 2 months of the break, 3 months of the break, then we came back, redid the team, and now we're moving that forward. To asset management, it's very crucial to us. We believe buying is good. It's fantastic. It's like a 1/4, 1/5 of the work, and once you buy it, you gotta have the baby and get the baby to the graduating spot and get out of the house. And that asset management will be very crucial. So the staying ahead on the asset management, it's how we get the data reporting and data analysis, that side of it, and also how it keeps everybody in check. I'll spend a little bit of time on that one. So what does it mean on a day-to-day basis? So let's say, and we start with asset management. With the first that we take a look at, one is the loan deal. Everything is in between. One is, and then that's like a structural barrier. There's a loan that's coming up due in 3 years, 5 years, whatever. There's nothing we can do. But we continuously keep that in mind because we have a target NOI to hit before that loan. Second thing that structurally never goes away is the taxes and insurance. That is happening. Now, if you have, all of you guys will do many deals. If you have many deals, 2, 3, 4, 5, it's tough for you to remember. So in our system, what if there's a reminder baked in when data comes in? Boom, Shariah, or Mike, Sanjay, or James, you have a loan, you have an insurance coming up due. This is your 120 days reminder. Automatically sends another email to the insurance broker to say, hey, give me a code. Keep running that kind of channel. So those type of nuanced things, that takes a lot of time. And also you have to remember, but those are big ticket items. So we're trying to bake it in as you kind of go through into the asset management framework. All right, going back to events. This week, it's a busy week for us. Mike, you want to talk a little bit about those 3 days as you kind of go?
Yeah, so actually interesting. I haven't got a lot back yet, but so we'll try to figure out to get the announcement out a little better. But we're doing a Masters Mastermind on December 5th in Houston, Texas. It's going to be from 4 to 7 p.m. And we'll share with you guys the specific locations. And also we will be going for a dinner after the mastermind here in Houston. December 6th is an open day for those, and I'm going to spend some time today with Jason, or tomorrow with Jason, and try to figure out if we can do some property tour with some of the masters that are in the mastermind currently. And then on the 7th, we'll have a couple select groups that will be pitching their deals to a group of 70 to 80 people on Saturday. So that's the upcoming work or things that are happening there. And love to have, if you're coming, you're available, let us know. We're going to send out some other notices because maybe it's getting missed a bit in the WhatsApp group. I know it's not perfect. So we'll just want to see who is wanting to come and who wants to do this with us this week. So it's our first time doing it. So, we'll get it going. And then we look forward to be doing this, roughly we're going to kind of be doing it, we think, city by city over the, next month or two. So we'll let y'all know how that's coming. The bonus capital raise community calls, those are on the portal. Those that have access to the portal, you can go to all the live calls, and I left them as bonus, Schreier, because they're intentional. Because these are outside of our standard calls that you and Sanjay and I are doing. These are bonus calls run by sometimes Maria, sometimes me, sometimes Trevor. But they're additional call opportunities for people raising capital. And then we also have on Tuesday and Fridays our active deal discussions. So that's the main things that we have going there this week. And then we're looking at some future stuff in MHC and ISCS for next year that we'll be going to, and we'll talk more about it as we get closer because some people may be interested themselves to go. We're not sponsoring anything there. We're just letting y'all know. And NMHC targets the, more of the multifamily type of things, and the ICSC targets more of the retail development, development, but retail type of products. So those are two that we'll be splitting up, going to as a team, and we'll let y'all know what they're more about and when they are. And everybody's welcome to go to those as well if they're wanting to get more into those. So
I thank you.
Yeah.
So on the again,
guys,
on
anybody's
the
got any
multi-
sorry, Shard, let me go. If anybody's got any questions about this week, drop in the chat, text me something, let me know if you want to know about the especially Thursday evening, because I want to be sure we get a head count of who's coming, so we can be planning well for that, especially Thursday. And then Friday, if Jason and I get the tour worked out some way that we want to know who wants to come to that as well. So thank you, Shire.
Thank you. So NMHC for multifamily, I'll spend a little bit more time on that one. It's very critical. This is where you meet people. Oftentimes, all the brokers, we exchange emails, we talk on the phone, but it's tough to break out. This is the aggregation point that you kind of go through. So if you're doing the multiple deals, this is a good place to go. If you're looking at, less than 5 million, then probably not the best place to go. But if you think you're doing that over time, you're going to grow, then that's a cool place to go just to kind of get that process, at least framework going. It's thousands of people. Oh, sorry. It's hundreds of. It's about last time when I went, 2,000-3,000 people come in. It's a lot. It's overwhelming first couple of times. Then over time you kind of do it. The first time I went, I anchored with a couple other people. Second time they guided me through. Now you're getting comfortable with it as you kind of go. So it's quite a bit of work. It's a fun thing. 2 days of heavy networking, heavy meeting, a lot of deal trading on the back and forth. But this is where all things, a good chunk of thing happens. Okay. All right. So let's go back and the capital raising. So Mike, real quick, next week, you in town or in Florida?
That's a separate thing. So
Okay.
talking about next week, we will be in Florida. So some of us will be in Florida from the 10th, 11th, and 12th. at the family office event there, so just if Sanjay will be holding down the fort on calls, I believe. And he may join, not sure, but we'll be there working on that, working on some fun things with different people, just adding that into some of our outreach that we do and continue to work on. So, but yeah.
Let me add a little more flavor to it.
Yeah, I don't know.
Like
what-
this is
Yeah.
um
Go ahead,
on
Shar.
surface, yeah, thank you, Mike. So on surface, it sounds cool when someone says, "Hey, let's family office, they have money, they want to go invest, go raise it." Then you have to look a little bit more critical way. So our understanding is that just because we showed up, it doesn't mean that we can get a check right away within a handshake of 2 days, right? That means that it takes time. This is our fourth or fifth one. Finally, we're seeing some familiar faces, and finally, we're seeing the conversation goes a little deeper, but still, we haven't, got anything yet. But the conversation is getting deeper, deeper, deeper. So, a long way of saying, if you are thinking to raise money from this minimum $2 million to $10 million check, that is a workflow. But understand as you go, there a lot of the folks are raising money, very less people with the money, and from the very less people with the money, they are really critically looking at every single thing. So it is a good thing, but at the same time, not a good usage of your time if you are positioned right, right? But if you're local there, come go, shake hands for a couple of days, you can continue with it. So that's like the caveat of sounds good versus the reality. In between, there's a lot of work that goes in, that's there. So for us, we work the same way like in MHC, and we're seeing a lot of familiar faces, and then finally it's there, right? So that's one. On that note, before I get into the deals, couple of things I wanted to share. As some of you guys know, we took a look at the growth, Q3, Q2 this year. Then we have Candela now, we have Verizon now. In between, we're running quite a bit of conversation between larger equity check sizes. So there are a couple of things that we have seen. There's an emerging trend that we saw last week, at least talking to 3 different folks. It's that everybody have invested in the multifamily, just like everybody else as well. On that note, they had their fair share of burn. That's why anytime they're looking at it, the deal, they are biased to where they're successful and where they did not get the success. Example, one of the team that I talked to, they invested, they said 14 or 15 deals in Houston, they come in as a pref, 2 of the assets that they had to take back. And so their feedback was Houston, I'm going to settle down for a little bit till I go to the other side. But if you give me something in Silly, Columbus, Berkshire, outside Woodland, I'll take a look at it. So their point is they're looking at secondary, tertiary market because they're finding less competition, less mumbo jumbo, whatever you get it, stay steady, and they kind of go. And on the other side, there's another team. They just got a big fund. They got a fund from somebody else, and that fund there, so they have a mandate to spend, and they're bullish. And they're bullish to a point. They said, "Give me the broken deals, give me the build this into fixer upper, and we'll leverage up to 85, 90%." So the point is there's dry powder out there, and they're waiting to find the right deal. Expectation of the deals are higher. On the pref side, they're looking for 15 to 18%. That means the project level has to be 21, 22%. That means coming in, you got to go in as and depending on the market, 6.5 to 7, that range. Otherwise, you're not going to extrapolate that much of a number on a value add deal. So that's some of this emerging conversation that we're seeing. And almost all but one moved into a 1980 or newer. From the last 4 conversation I had, one of them still bullish. He is extremely bullish on that 70s or older. Okay, going back to the equity raising side, so the Candela 5 or 6C, we're halfway through, and it's a work in progress as you go. Horizon, I think we're almost there. And the CB Stewart that's in the pipeline. The CB Stewart, This is this is a new development. Land is under contract. Seller is staying at 3 million. We need about another 2 million. We haven't started the raise yet because it has a water supply constraint. We're trying to get a hold of the mud district to go through that. Beyond that, it should be okay. Now, this is an interesting one. Sandra, you want to talk a little bit about the phone call that we're going to have later today and how that thing escalated? If you don't mind.
Yeah, so so that's a deal. It came through a off market, not a broker, but this somebody in New York who's close to the financial institutions, so gets these leads, who's been reaching out for last few years. We have talked, haven't really materialized a deal with him, but you never know. So he reached out. Originally, it was, oh, it's foreclosed. Then it's like, well, it's going on foreclosure tomorrow, right? And the lender has control. So then we're like, well, Texas foreclosure process doesn't mean just because it's on a foreclosure docket doesn't mean lender has the control, right? So a little bit of education for that side, but then he's like, well, I'm not getting anything from the seller anymore. Anybody at the lender? So and as omnipresent as Schreier is, he drummed up a contact at the lender, and they're like, oh yeah, we have this deal going for foreclosure. Let's talk and let's see if we can work something out. So that's a call with the lender. We have lender contact. We don't know what it's going to be like, but that lender contact, we have a call to see, hey, do you really want to foreclose? What do you want to do? Where do you want to go? And we'll see what happens. So some discovery stuff there. Back to you, Shraf.
Yeah, thank you. And the interesting part was we had this conversation on last Wednesday. We had the contact on Thursday. Then Friday night, 10 o'clock, he was texting back and forth, texting back and forth on LinkedIn, and schedule was set up today on Friday late night. So things sometimes escalates quick. And again, it's the working through the process all the time as you kind of go through, and it just takes time over time to build a relationship and continue working on it, being present somewhere, being active somewhere, and when a deal shows up, you can kind of work your way through as you go, right? So I don't know how that's gonna go, the conversation, but I think that was kind of exciting to see that how the workflow really were executed right?
Yeah.
The last one is debt and equity fund. It's a work in progress. I think the debt fund is coming together pretty nicely. This one, we're waiting for 2 pages, then we'll be done. Then we can go
Schreier,
into, yes.
can I ask you a question? So who was the lender?
Let me see.
It's New
It
Point.
was- It's a new point.
So
Thank you.
okay, so
New
okay, so it's not one of the big banks. It's just okay.
No, no.
Okay.
It's yeah, it wasn't any of the big ones. And New Point surprisingly is a servicer / lender, right? They do some balance sheet lending, but they are mainly a agency servicer who got approved for agency servicing within like last 12 months. As you know, for Fannie Freddie loans, there is only a limited number of servicers that are approved by the Fannie and Freddie, and they say, yeah, you guys can service loans that are backed by Fannie and Freddie. So New Point is a newer lender, but Arbor, Wells Fargo, Chase, and all these big guys, they've been doing this for decades. So New Point is a newer player in this, which was a surprise for me when I looked up and found out that they are approved for agency loan. Back to you.
Yeah, I didn't.
I'm assuming. I'm sorry to interrupt you guys, but I'm thinking on the same lines. Last week I was at this conference, and Mark Shapiro, who's a really big guy in multifamily, he was there. And he said that, of course, lenders are starting to not starting, but like they're more doing that right now than before, calling him about deals that they want to basically, like you said, Sanjay and Schreier, they want to get off their books, so they keep calling them the big players. In fact, they have a deal here in Houston, near the Galleria, and he was talking about cap rates, like going in of about 11% in the Galleria. So I was like, we definitely have to be doing that too. Like talking to lenders if possible. But of course, it's always about like the big lenders versus the smaller lenders, because I know big lenders, they tend to have like more red tape and more bureaucracy, going to the right department and going to the right people. So I wanted to like ask you, what are your thoughts on that? Can we do anything, or what should we be doing, in that regard, us as being part of, Massive Capital?
That's a deep question, right? So let me kind of see if I can simplify that. For us, going back, it's all about the positioning, right? And then understanding what product category that we're gonna go compete in. Let's say if I'm competing on, if I want to buy triple net assets, then I'll come to multifamily in a bit. And then the first question we ask, what the ticket size? And that means what's the buy box look like? If I'm sub $3 to $5 million on a triple net, then hey, going in cap rate, I must have a positive leverage. That means if the bank is 8.25, I need to be over that no matter what. Otherwise, I don't cash flow. Period. Then you kind of take a look at it from that positioning, right? It also means is that whoever can pull the trigger fast typically will win the deal, because everybody's biased to a certainty of close. So if I'm looking for a $5 million deal, I really got to make sure that I'm pre-approved. I have $1.5 million that I can shell out yesterday, so I am ready. If you can have that, then you go, drum up everything that you can, and you'll get a deal. Right? Understanding again the competition, right? So if you go more than that, then you got to have more equity in there, and you got to have the balance sheets checked out. You got to have a team ready to intake the deal and turn that around. Then you can go shore up the deal. Same philosophy for multifamily, right? Multifamily, the beautiful thing is all the things that we talk about. On the other side, it is extremely competitive. And from the buy side, the good side is the retail syndication. It's typically $7 to $15 million. That has tapered down quite a bit, so less competition to begin with. And the second thing is also the loan guarantor. Almost everybody who did most of the loan guarantor that we know within our circle, they have debts that went belly up, or there are some kind of a hold list or blacklist, whatever you call it. So folks were clean. Thank you, Massive Capital team, Mike and Sanjay, we're clean. So we're getting a little bit more the phone calls. And biggest issue we had before, that they wanted us ask a question, okay, which asset did you do refi or exit, things like that. So with that note, Pasadena refi, it's a big positive for us. So Arbor, we're working very close with Arbor. We have a deep relationship. We feel like it was a deep relationship. And now it's getting better because we're refining the bridge loan out of Arbor into a HUD loan. That gave us some additional brownie points based on what we get. So now we should see deals coming out from the Arbors where they're thinking to foreclose on or take over, something like that. We were as a preferred sponsor team, but we did not get the lights because we did not take the Pasadena from the bridge to the HUD yet. Now we're doing it. And that's a tactical choice. We stayed with Arbor to the HUD. So in our refi team, Sanjay, correct me, the lead asset manager who looks at all of Texas, he's there. So we're having a direct conversation. So now we get to see those deals. Some of
Yeah,
those,
and
go ahead, Sanjay.
sorry, go ahead. Sorry.
No, I'm saying some of the lenders we haven't worked, we don't know. So again, the competition-wise, we're hanging out with the new folks, smaller funds, 100, 200, $300 million of equity deployed, and we're sticking with the relationship that we have already, and we're trying to go deeper in it to see if we can get some deals out of it that beyond the market, right? Back to you, Sanjay.
Yeah, and full transparency here, right? Like Massive Capital, we have some deals that we're working through issues, the market issues. So in Pasadena deal, now that we launched the refinance, the comment we got from our contact is like, hey, the leadership at Arbor said, hey, now that they have launched the refinance, we are in a better standing than we were before. And the Arbor leadership team saw how we kind of navigated the last year and a half of the tough environment. And, on that deal, multiple things happen at the same time. Insurance high with Houston market, interest rate, fire at a complex that stopped us from doing a refinance, and then the overall market softening. So one of those things hadn't happened, we would be still good, but things happen. So the Arbor leadership team is saying, hey, look, now if we see something in that looks a little bit difficult deal, we're gonna call you guys. So that's a very encouraging news, and of course that relationship comes very, very handy there. But to directly answer your question, Luis, right? Very good question you asked. What should you guys be doing, or you can do, is first and foremost, everybody knows, build those relationships with the equity groups, with the lenders, and you can Google list of servicers for agency loans, or list of bridge loan lenders, the big, and I think maybe we can research and share it one of these weeks. Start building those relationships, but relationship goes so far until you show, when we underwrite this deal that we have a call with the lender today, we went in saying, Mr. Lender, you do the 100% financing of our purchase, right? And the lender would say, well, why would I do that, right? I'm taking over the deal and I'll have this. And we said, look, here's our track record. We're going to bring $2 million deal. We're going to put this on track, and you have a higher probability of getting your loan amount back than you would if you just foreclose and take it over, right? So showing that conversation is a key. So as you build a relationship and somebody mentions something, be on a lookout for, yeah, we're going to ask for everything in the world for us to do the deal, because once we put our money in, nobody else cares, right? It's our money and our investors' money. So before that, we're gonna ask everything, because do 100% financing and do interest only and defer the interest and give me the escrows and all the things that we talk on our LOIs. We talk everything. We ask everything, but we get it, and that's gonna be a good deal. So build relationship. Ask for everything. Start with asking everything and then negotiate. Show the experience and the team behind you, as well as what you will be doing to bring it to track, right? And that detail counts. That gives the confidence of what you're doing. And then, of course, time is of essence on these things. So those 4 things to do. And yeah, we've been hearing these lender defaults, the bridge loan defaults will happen, but quite honestly, it didn't happen as much as everybody thought, because the lenders are working through with the owners, right? What to say that will not continue next year, right? More than likely it will, but there will be some that will fall through, so that will continue. So be ready and build those relationships and continue that process. Sorry, a little long-winded there. Back to you, Shrai.
Always did answer your question.
100%. I'm just already thinking about, going back to small lenders, or like community banks that I know, people that I already know. I think it's easier because you already know them. So I'm gonna go back and make those calls.
Yeah.
Well, thank you. So going back what Luis was talking about, look at this year, reflect on this year, what worked, what didn't work, what you don't want to continue next year, and where you're going to double down next year. And then come up with a plan and a timeline so you can execute on it. And that's a good exercise this month. We're going through it. We encourage you to go through it so you get clarity. If you need help, one of the calls, we can spend some time to figure out the strategic framework of it and how to kind of go around it. Okay, so in a sense, there's nothing that we're closing this year. So we're just finishing a couple of the raises. Over time, we're not looking to close anything this year anyways. So it's going to boil down to next year. So for us, it's more of get the house clean, reflect on what happened, get ready for next and a year, and continue building that relationship. And again, take everybody else in the master's program through the same journey as we're going through. So that's most of the time that we're spending right now. Buy box, we talked about it. KP, Tool KP, $5 to $20 million deals. On a massive side, we kind of pushed it forward a little bit more, 1980s or newer, no all bills paid, 100 plus units. That's tend to make sense. That's all I had today, and I appreciate you guys listening in. But I'll stop sharing and open for questions, comments, anything that you all are doing in some 2 cents, or you want to run by something exciting you're working on, or not so exciting. I'm on mute.
You have anything else to add or highlight we missed? Please feel free.
Cool. Hey, by the way, Sujit, I saw your LinkedIn. You are an Iron Man. It's like 4 times, right? That's what I read. And that is like, I was like, God damn, that's nice. Kudos, man.
Thank you,
So-
Shari.
How many times? Come on, talk a little bit more. And I like stories. It's kind of, I know, and it's really interesting. Please.
What's that, Shari? You kind of
That's it. That's it.
broken-
So how many times did you do the whole thing?
I did it twice. I did my first one in 2019 and then the second one in 22. And then the second one was way more easier because I had gained a little bit of experience. I was wiser per se. So yeah, I was able to shave off an hour and a half from the first one.
How many hours?
Bravo.
No, that's easy. This is cool, man. This is awesome. I mean, look, it takes a different demeanor to go through this, and they kind of roll into whatever that we do. When I saw your LinkedIn, I was like, wow, and that's pretty impressive. So, kudos, man.
Thank you. Thank you, sir.
No problem. All right. Now, hey guys, if you thank you everybody, really appreciate it. Let us know if you can do anything for you if you guys have any questions. If not, I would like to end this call. Sanjay, Mike, anything else to add? Very good.
No,
else?
just a reminder, you know, Rimsha is here. For all of you that maybe need help, reach out to her on, you can use the WhatsApp group that's there. Be sure you've gotten into like the portal and have access for everything you need there. Linked, you know, connect into the WhatsApp groups if you haven't. Connect into the Facebook groups if you haven't. And follow up anything that you're missing or feel like you want some support on with Rimsha, please.
You know what, Olivia? Would you like to add anything before we wrap up the call? Okay, that's good. All right. All right, that sounds good. Happy Monday, everybody. See you guys tomorrow at 9 o'clock. Thanks.
Thank you, everybody.
Thank you.
Have a good week.
Thank you.
You too.
Thanks, guys.
So let's see.